Hello traders, and welcome back to another Conquer FX YouTube video. We haven't posted here in quite a while, and I've been meaning to do a video about data collection for quite some time. This video is a simple video and it's about the Conquer approach. It's basically a foolproof method for trading with a statistical edge. Now, this is going to be the basics to get everyone started. Some of you may already be dabbling into trying to collect statistics around your edge, and I want to create a framework that will bring you through a step-by-step process on essentially how to find your sweet spot, okay? Because, you know, in the world of trading, finding an edge can be the difference between success and failure, okay? So this is more of a professional approach for finding those hidden patterns and sequences that can help you improve and optimize your performance until you find that sweet spot. Because what we see over and over again is traders essentially will jump from strategy to strategy looking for the golden nuggets. But the only reason why they do that is because they've never been given a process that allows them to find the golden nugget within their own strategy, and therefore a process that they can continue to optimize, improve, and become better, and ultimately then scale their trading business. So I'm not going to waste any of your time here, but what I will ask is, can you please just hit the like button and subscribe, because there's a lot of work that goes into these YouTube videos to provide some free content for you all. And I'm actually going to be giving away a little bit of a present here at the end for those viewers who stay around. And I promise you it's going to be worth it. So anyway, let's get straight into this presentation. First of all, what we need to understand is there are different phases, okay? So the first phase is the planning phase, okay? Something that people overlook, and this is why they essentially will be testing for hours and hours and hours and hours. They'll go through data collection and they'll get pretty bored because it is a boring process, but it's a necessary process. But by actually going through the planning phase, you can get all your resources together in order to make this a much more smoother process. So the planning phase is essentially like outlining our goals and the task that we want, our goals essentially that we want to achieve here. So whatever your test is going to be, and I'm going to use very, very, very basic examples here to just fit the broader audience. So do bear with me and use your own imagination, critical logical thinking, to adjust it to your own plan. But for example, let's say you wanted to do a simple study about engulfing patterns, one of the most simplest patterns out there. You want to outline your basically the goal that you want to achieve here. So maybe my goal is I want to outline, okay, what is the probability of an engulfing candle moving 1 times its range? Now, some people may overlook this, but I want you to think a little bit more deeply even about something very simple. If I have an engulfing candle, okay, essentially like this, there may be a way to actually gain some sort of statistical edge here that allows me to say, okay, if an engulfing candle forms on the daily chart, what is the probability that I will see at least 1 times its range movement after it forms? So if I take the range of that and then I add it on, for example, what is the probability that we will see at least 1 times its range of movement, which could then set you up for the following day to potentially see maybe an up move, a correction, and then a further move up. Because now you're playing with much more of a statistical daily bias rather than just basing it off simple market structure like 90% of individuals, okay? Once again, just a simple idea. So we've outlined our goal here. I want to test what's the probability of an engulfing candle moving 1 times its range. After that, I want to start organizing all of my resources. So I'm preparing to get started now. So this is the Excel sheets, relevant softwares, what formulas am I going to have to use to develop this data and gather this data. And essentially, we're just getting organized here. We're just planning ahead. Like any good trader, they're always planning ahead, fail to plan, or what is it, plan to fail, or fail to plan to fail, whatever the saying is. But you want to get all your resources organized. So that would be getting your Excel sheets organized. So for example, what columns are you going to need? So for example, in this column here for the engulfing pattern, I may want to put the date. I then may want to put if it failed, yes or no questions, keeping the formula simple. I may even want to target, okay, what on average, how many you know, for example, if it was a bullish engulfing, how many green candles can I expect after that? I want to track the failure rate. Maybe I want to track how far of a correction on average. So for example, maybe I want to say, okay, what is the probability of us retracing back to the 50% level before we see a further move up? Okay, so I can put all of these different columns in place, and I'm organizing the data of all the questions I may have about this particular pattern that I want to study. From there then, listen, this is simple, but you want to actually set a deadline. You can go on testing and for days and days and days, but the best thing to do is if you have 30 days and you want a 300, sample size, for example, the best thing to do is split it 10 trades per day and stick to that and have the discipline to stick to it. Become organized, plan ahead, and the process won't seem as overwhelming. Because the majority of you say, oh fuck, I need to basically collect 1,000 data points by tomorrow. But the reality is, if you actually split that even over 100 days, you can definitely do it quicker than that. But you know what I mean. You want to build it into or cut it into much more digestible steps. And this is what the planning phase is all about. We're planning to make the statistical collection or the data collection a much more easier process. From there, we're then going into the data prep phase, okay? So basically, what we want to do is we want to essentially, the purpose of this exercise is to prove to ourselves that our hypothesis has potential. And it gives us a visual format to work with and prepare us for the next phase. So what you don't want to do is you don't want to just take an idea and then just start jumping straight into data, because your time is valuable and you don't want to be wasting it on ideas that have no potential at all. So essentially what you want to do is, excuse me, something just fell here on the on my desk. But essentially what you want to do is you want to start developing a hypothesis, and you want to take a very small sample size. So we want to make the process as accurate and also as efficient as possible. So what you want to do is you would simply want to go into your charts and start spotting. So for example, if we have all of these candles here, okay, you want to start actually highlighting all of the areas where you've had an engulfing pattern over, the last 100 days. And you just want to see, is there even any potential there? Are there, out of 10 examples, are there at least 6 examples that are already validating your hypothesis, which is just an educated guess? So in other words, our hypothesis here is, I want to see if the engulfing candle will move 1 times its range. Or will the market move 1 times its range after an engulfing pattern has developed? And that's all we're doing. We're developing a hypothesis, and then we want to test a very small sample size to see, is it even worth my time? And like I said, this is essentially just being very efficient. We're not wasting our time here. We're trying to see, does this pattern even have potential? Okay, we're not just taking a pattern and then blindly going to do this massive data sample size, because in reality, after about 6 months or so, you're going to see if this pattern starts to hold any weight at all. You're going to start to pick up on different notes and things that you may want to improve, which all come through actually carrying out the process itself. So number one thing here is to actually just get started, because even if your hypothesis fails, even if you see, hey, this does not hold any weight at all, this idea I had in my head, it does not hold any weight, what you can still do is throughout that process, you may find something else. Something else may stand out as you mark up these ideas on your chart. And then your data collection may say, hey, maybe actually it's better to see if it will just move 0.5 of its range. Maybe 1 times its range was too big. That would maybe look like a much more accurate sample size. And then you can do a much more larger sample size on that, and you'll be able to qualify both. So the data prep phase is literally just going through your charts, first of all testing to see if the hypothesis works, and then if the hypothesis works, what you want to do is you want to carry out marking out all of the samples available to you. So let me just jump into the chart here and show exactly what I mean. So I'm just picking a random pair here, pound dollar, and essentially I just want to mark out what an engulfing candle is. Now, in order for me to be extremely accurate with my data, you need to quantify everything. So how I'm going to qualify everything. How I'm going to qualify an engulfing candle is one that essentially wicks below the previous low wicks above the previous high and engulfs the entire body. That is how I'm going to quantify that. Now you can go and hand pick this, or you can pick an indicator on TradingView, for example, to be able to just go through this and simply, pick out the engulfing candles yourself. So that's exactly what I'm going to do. I'm going to find an indicator that will qualify these things for me. Okay, so now as you can see, I have these little marks in my chart, and I'm just going to jump to the daily to make it more accurate. And as you can see, this is what I'm qualifying as an engulfing candle. It has broken the low, broken the high, engulfed the body. That is a qualification there to make sure that my sample size, all of the points that I'm picking, are as similar as possible. Okay, that's essentially what I'm talking about here. I want them to be the exact same process, because if I'm kind of picking random ones, like, okay, maybe this one here, maybe this one here, and just eyeballing it, it's very, very hard to make sure that you're going to keep that consistency in what you're actually picking throughout your sample size. So I found an indicator here, and I can just run through these ideas. Okay, well, what's the probability of it moving 1 times its range? So you could say here, this moved 1 times its range. You could say here it did. Here it did before breaking the high. We stayed around, but we did not break the high. Here we did as well. Here we did as well. We failed here. We didn't really make it here. Okay, I'm seeing, okay, we didn't here. We almost here. Blah, 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 blah. Okay, so you can see we did it here, we did it here. So there's a good few sample sizes to say, hey, there might be something here. Okay, and that's all I'm looking for. I'm first of all qualifying to see, does my idea even make sense? And then I'm going to mark up all of the setups for a few years to make my data collection a much more efficient and a much more quicker process. So let's get back to the presentation. Now, the next step then is getting the data itself, collect the data. So first of all, we want to ask ourselves 3 questions here. What, why, and how? So what we first of all want to do is we want to analyze the data to identify what has happened repeatedly over and over again. What caused the market's movements, and what can you do to benefit from it? So that would essentially involve jumping into these charts and analyzing each engulfing candle and asking ourselves, okay, why did this take place? What is happening? What are the similarities here? What is the probability of us moving 1 times its range? What is the probability of us moving 2, 3, 4 times its range, etc., etc., etc. And then we want to ask ourselves why, asking important questions and uncovering the underlying fundamentals that make your strategy work. So, why is this working over other examples, for example? So if we look back in the charts again, I'm simply asking myself, and you can do this with anything, why did this example work here compared to this example here? What is the difference? Are we at a new weekly high here and we're in the middle of a weekly range here? Was this a particular news result here that had this overall change in the momentum and this was just overall order flow? Whatever it may be. You want to start asking why, like what and why are these samples different? So asking these 3 questions are extremely powerful. Next, we want to start asking how, understanding how to benefit from the market movements, systemizing your approach, and then emphasizing quality over quantity. So how can we benefit from knowing this information? So now that maybe you've collected the stats and you're starting to see maybe you have a 60% probability, you can say to yourself, how can I benefit from this move? Okay, so how can I systemize this that each day when I see an engulfing pattern, how can I profit from now knowing this information? How can I bring this into my edge? How can I get an entry? How can I maximize the results here to only take the quality setups over the more lower probability ones? So what, why, and how are the most powerful questions that you can ask as a statistical trader. Now we want to clean the data. Yes, we clean this, okay? This is a very quick and simple process. We're removing parts of your test that are not useful to basically improve your edge. or we're removing anything that you can't work with all that much. Okay, so essentially what this means is we're looking at your data and saying, okay, what is the 20% that is providing 80% of the results? What are the things that we can really leverage, and then other things that are maybe not providing so much leverage? One thing I also want you to realize is I want you to think outside the box. When you're a statistical trader, you need to think outside the box and generate ideas, even from ideas that fail. So for example, if you went through this test and you found that, hey, there's actually only a 20% probability that we're going to move 1 times its range, so this candle here, before we break the low. Well, then that means you can flip that and say there's an 80% failure rate that we will move 1 times its range. So for example, how could you leverage something like that? Now, I'm not saying these stats are accurate. I'm literally pulling these from my head, but I'm just showing examples. So for example, if you knew that there was an 80% probability that this was not going to move 1 times its range, in another scenario, you may look and see, okay, well, maybe I could look for changes in structure in here to then target back towards this low, because I know there's an 80% failure rate here and only a 20% success rate that we're going to reach 1 times its range. And this is how we start working with the statistics. Even when we have something that fails, we can flip that and now fade the overall idea. You know, empowerment through refinement, okay? So using the refined data to optimize your system by observing what works better or worse, and adding or removing certain components as needed. So like I just said here, you know, if something doesn't work, you can take it out. Maybe you found a particular stat that doesn't really hold any edge at all. It's probably around like the 50% level of success. It's not going to provide you with massive edge there. And, you know, you can just remove that simply from your test. And, you know, the powerful thing is here, people say, oh, I wasted my time. No, you did not, because now you know what not to do. And this is the power of collecting statistics. Next, what you want to do is explore the data. So this is where more refinement takes place. You first of all want to identify from the statistics you've collected what systems and metrics work best for you and your needs. What statistics have you collected that make the most sense to fit into your plan to provide you with more of an edge in the market? From there, you're then also going to analyze the data and eliminate what doesn't work, what does not benefit you, what is not needed, and what is overall overcomplicating your system. Because remember, we want it to be streamlined and efficient. Finally, like we just mentioned here, make it simple. Complex systems are not good. Break down and improve different parts to ensure a more profitable outcome. Find out what are the things that are providing 80% of the results. Find out how you can add that into your system and what metrics work best for you and your needs, and then double down on them. Next is the modeling phase. So this is where you're actually taking all of your statistics and creating a strategy around it. You're testing your basic rules to see if they work in practice. So now that you have this new statistic, this new insight, and maybe you want to start using it, you know, on top of your already well-built and tested edge, you want to start testing and evaluating that. Backtesting the strategy with new rules to see how it performs using historical data over time. And from there, you can then refine and retest further. You continue to refine and improve the strategy as you test it under different conditions. Because remember, your strategy is not going to perform the same way over all different market phases. This is very important to understand. A strategy that has a high characteristics of strong pullbacks and continuations is one that works well in a trend. If you are getting in at the bottom of these corrections using Fibonacci, order block, whatever it may be, essentially what you would want to make sure you're not trading in is periods of ranging markets. Okay, it is very simple to understand that these are going to be your strongest losing periods, while these are going to be your strongest winning periods. So being able to quantify when I do not get into a trade compared to when do I double down on my trades is extremely important as well. And you can do this by testing and evaluating and then further refining and retesting. Now, what would this look like? This would essentially look like this, okay? So here is an example of a first test. Very, very poor example of an equity curve. As you can see, we start making some finer improvements by refining and retesting and discovering more about the statistics that we're trying to collect. From there, then the equity curve starts to have much more of an upwards curve. And then finally, we can see we've refined the data completely by doing a comparison analysis between what are our winning trades and what are our losing trades. Now, the number one thing you want to keep in mind during this process is you do not want the strategy fit. And what that means is if you have a period in your trading like this, so in your backtesting, if you have a strong period of drawdown, for example, like this area here, what you want to do is you want to come to these periods and analyze them and say, what are the difference between periods like this compared to periods like this? What you're doing is you're actually looking and saying, hey, how can I improve this area or at least limit this? But you do not want to change your strategy overall, because this is what happens when people will strategy fit just to fix this period of drawdown. And then that results in actually manipulating all of the rest of the data, and then they don't know why their strategy isn't working. So what's a much more better approach? A much more better approach to see, okay, well, how can I make sure that I can spot when these phases are coming and I simply don't trade them? So now you're actually keeping your edge intact, but you're not actually trading this part of a market phase. And that could simply just be a different market phase, like I discussed with the ranging and trending characteristics of your trading strategy. And that's why it's so important to understand, where do I want price to be positioned? How do I want it to move, etc., etc. Another way of improving your results is actually looking at your overall equity curve, like I just discussed up here, and looking at the gaps in performance, literally just like this, taking a line saying, hey, these are periods where it didn't perform as well. Can I improve these in any way without manipulating the overall data? And finally, then we're working with the follow-up process. This is where we actually deploy the model to live testing under a demo account or under just much more controlled conditions. We can do some further refining here, revisiting the model and making further changes once emotions come into play in live trading. Because in backtesting, you've obviously no emotional attachment to the money. You don't really care. You're executing flawlessly. But when you take this model to live markets, now you need to see, can you even execute the strategy you've built? And from there, we want to do continued journaling, developing a database for future reference and improvements by having a trading journal. So guys, if you've enjoyed this video, please hit the like button and subscribe. Now, I did promise you all something very special. So in the link below, you are going to have, so in the description below this video, if you take a look, there will be access to a free course, basically breaking down things, about data collection, about how to develop profitable trading plans, the correct mindset and expectations and lens to have when you are trading. I'm also giving away a free ebook, and I'm giving away some executional flowcharts to help you improve. So if you are interested in that, you can hit the link in the description below. Everything will be there. And please, once again, subscribe to the channel, tell your friends, like, comment, and yeah, I'll see you in the next one.